Hello, I'm Demetris Theophanides and I'm a senior private wealth manager at XSpot Wealth. Welcome to the market analysis of the first 6 months of 2023. Today, we will examine the behavior of the markets, which are often different from the media predictions, the headlines, and the real economy. So, how did 2023 begin for the economy and the markets? At the beginning of 2023, the investor sentiment was at historical all-time low. Many investment firms predicted that the recession will end the market rally and will cause a market crash. The banking crisis was perceived by many as the beginning of a perfect storm. Inflation was at high levels at the beginning of the year, and the general consensus was that the Federal Reserve will increase the interest rates to at least 6% to battle inflation. Some analysts insisted that the upside movement of the markets, which occurred at the time, was due to the performance of only few well-known high capitalization growth stocks, such as Apple, Meta Platforms, and Nvidia. And how is 2023 evolving so far? The anticipated recession in the American economy was not materialized during the first 6 months of 2023. Market sentiment and the general prevailing attitude of investors improved, but not at extreme levels. The worst of the banking crisis is over due to coordinated government moves who intervened and provided extraordinary liquidity and stability within the banking system. As of June 15th, the Federal Reserve finally stopped interest rate hikes at 5%. This was the first time since March of 2022 that the Federal Reserve did not increase interest rates. The fact that policymakers were comfortable enough to take a break is encouraging news for the economy and the markets. After all, inflation appeared to be finally easing. The existing high interest rates also mean that fixed income investments have higher yields and are more attractive than they've been in years. Despite some market volatility, the market rally continued for the first 6 months of 2023. The rally was not supported only by a few large growth companies, but most of the stocks are currently at 52-week highs or at all-time highs. Nasdaq recorded best first half in history with gains of 38%. S&P 500 recording gains of 16%. Eurostoxx 50 recording gains of 16%. Brazil Index recording gains of 16%. The Japanese Nikkei recording gains of 27%. And this is a new 30-year high after years of stagnation. The Emerging Market Index recording gains of 5.5%. Almost all US indices and major European indices are now less than 5% of their all-time highs, although they suffered losses of up to 30% in 2022. Bitcoin recording gains of almost 100%. Bitcoin has all the characteristics of mature market assets, such as sudden and extreme price movements, high volatility, and can be a speculative bubble. I'm mentioning it as it is now an indicator of the willingness of people to take excessive risk. Let's now look at some interesting statistics as we enter the second half of 2023. Statistically speaking, for the past 10 years, stocks ended higher 90% of the time during the month of July. When the S&P records gains of more than 10% in the first 6 months, the next 6 and 12 months bring even more impressive gains that exceed 20% in several cases. Historically, a strong first half brings an even stronger second half. In June, the Russell 2000 Small Cap Index, which measures the performance of about 2,000 of the smallest publicly traded companies in the US, ended a consecutive 17 months negative return. Statistically, this leads to a new long-term bull market. The S&P 500 has recorded 5 consecutive weeks above its 18-month moving average. This is another signal of a start of a long-term bull market. Despite the spread of bad economic news by media, the geographical turmoil, the high interest rates, and persistent inflation, The markets are up for the first half of 2023. During this period, at XSpot Wealth, our portfolios recover from the declines which occurred during 2022 and are following the existing positive trend of the markets. This happened because at XSpot Wealth we follow a specific methodology which combines the power of latest technology, extensive risk management, and the lowest cost possible. We continue to suggest to our customers to stay invested for the long term. Even in volatile times, this is the best way to pursue your long-term financial goals. Thank you for watching this video related to the market analysis for the first half of 2023. Please stay tuned for more videos to follow.